All right, guys, let's get into this.
Nike shares. I'm trying to find when they...
Oh, and also, in the comments section, let me know. Are you a buyer of Nike stock over the next few weeks? Or are you staying away from Nike stock over the next few weeks? I would love to hear your guys' opinions and perspectives in that comment section. If you view Nike as a buy now at this point in time, or if you're like, no way, I don't want Nike shares. I'd love to hear from you guys.
Traded at 80 last...
Because you know my opinion. Screaming buy, easy money.
I think it might be like 5 or 6 years. Falling pre-market, as you can see there, 14, almost 15% down to 80 after the company warned that 2025 fiscal sales down mid-single digits. Analysts, Bob Durbel is here. Analysts were looking for, what were you looking for? People were looking for up 1%,
yes,
right?
That's right, John.
So that's a huge miss. Your Guggenheim Securities Director of Equity Market in Securities, that's staggering. And as I said, I think it might be somewhere back in 2019, last time we were at these.
This is ridiculous right off the bat, right? Absolutely ridiculous. First off, why is it so shocking? Nike says, sales are going to be down mid-single digits. Have these people not looked at all these other companies? Have they seen that Apple's iPhone revenue is down billions and billions of dollars? Apple's latest quarter, iPhone revenue was down like $6 billion on a year-over-year basis, right? The iPad business was down like $1 billion on a year-over-year basis. The wearables business was down like $800 million on a year-over-year basis. Look at Starbucks revenues. I mean, when does Starbucks ever see their revenues going negative? Their revenues are negative. Look at Home Depot. You go company after company, and it's like these people never looked at these other earnings reports and thought, man, maybe a global company like Nike could get hit as well. And keep in mind, Nike, their customer base is everybody, right? But at the end of the day, there's a lot of people that also buy Nike products that aren't in the greatest financial situation, right? And those folks, guess what? They've been hit by inflation harder than anybody's been hit by inflation, right? And so for some people out there, they just can't afford to go buy a new pair of Jordans right now. Yeah. I know it's hard to imagine for people that are loaded with money, but yeah, there's a lot of people out there that can't afford a new pair of Jordans right now. Can't afford a new pair of Nike Air Max or whatever, right? And so can't afford a new pair of Air Forces. Like, it shouldn't come as a surprise. People have been sliced and diced by inflation for 3 years. And so if you make a lot of money, if you got a pretty high net worth, like you have no problem, or if you have really low expenses, things are fine for you, right? But there's a lot of other people, we just got to understand, a lot that are not in that situation, are basically living paycheck to paycheck right now. I would say right now, there's probably the highest number of people living paycheck to paycheck since the great financial crisis right now.
These levels 5 years ago.
Yeah, no, I think a couple of things. Even in the near term, there's a big step down, double-digit declines expected in the next fiscal quarter. And, when you look at the pressures, there's two pieces of this, the lifestyle piece and then you got the performance piece. The lifestyle piece is their key franchises, Air Force Ones, the Dunk shoes, and those are under a lot of pressure. The other piece of this is within digital. So, stores versus digital online and direct was down double digit in North America. Sort of aligns with some of those key, lifestyle franchises. So both of those businesses, are under a lot of pressure. China, is really promotional. I think in China was up 7%, but there were some shifts that went on, highly promotional, competitive, some macro concerns over there as well. So you put sort of the digital piece with the China piece, North America and China. We lowered our revenue expectations, our earnings expectations, and accordingly took down our price target.
Down to?
115 from 130. Ultimately,
that's still insane upside. Remember, Nike stock closed on Friday at what price? $75. He's saying it's going to 115 over the next 12 months. That's a big move up from here, folks.
Be at 80.
Yeah, no, I think the interesting thing is your point on the multi-year low is we had taken some numbers down, I think 2 months ago, just not enough. And so from the business standpoint, there was some expectation for, some turnaround work. This is a bigger leg down than we anticipated, but I think they're doing the right things. I think they're really focused on innovation. We have some, sporting events coming up. You've got the Euro Championships, you've got the Olympics, multiple innovative products within running, Caitlin Clark within women's basketball. They're hosting a meeting, in the fall, late November, to really reset things. And,
this is where people don't understand what's actually going on in the economy, and where they don't understand what's actually going on with Nike. And they think the Olympics is magically going to fix Nike's numbers. No. At the end of the day, what it just ran you through, if somebody's living paycheck to paycheck and they don't have the money to go buy a new pair of Air Force Ones right now, guess what? They're not going to do it because they can't do it, right? If they already maxed out their credit cards and they're paying already 28% on their credit cards, like, they can't go buy a new Nike shirt, okay? Like, it's not hard to understand, for me at least, but people don't understand what's going on with the economy. If we were in a situation where Nike's numbers were, they're talking about down, mid-single digits, let's call it 5%, 6%, whatever, for this year, but Apple was reporting great numbers, and Starbucks was reporting great numbers, and Lowe's and Home Depot and all these other companies, all the global companies, and UPS and FedEx, then I would be concerned. Then it'd be like, oh boy, like, why is their revenue going down, but all these other global companies are doing great? It's not the situation we have right now at all, right? And so, little food for thought in regards to that.
I think if this isn't a kitchen sink type of a quarter, it's close to one.
All right, I guess that's the positive. But Nike's always had competition. I mean, I know Hoka, and there's some upstarts. But what? Put your finger on.
Those companies are all a joke. Like people try to talk about that. Those companies are all a joke. 5 years from now, you're going to hardly hear about those. Allbirds is nearly going bankrupt. 5 years ago, that was all the talk. Oh my gosh, Allbirds shoes. Now the company's nearly bankrupt. These Hoka, all these other companies, they're fly-by-night companies. Their business models are hot, then they go cold. It's the same thing decade after decade after decade, and people want to try to predict, like, oh, maybe this is going to be. No, man. It's happened to all of them. Reebok and One. They all come, they all go. It's going to be no different.
The real core of where they screwed it, the management did something, product mix, something is not right here. Some miscalculation was made.
I think it's a combination of two things to one thing. I think they stayed too long with these lifestyle franchises, with the Air Force Ones, with the Dunks, without a pipeline of innovation. So now they've accelerated the lifestyle declines, inventory's down 11%. And then, the pipeline, you can't turn it on overnight. So they've accelerated forward some things that they've had over the next few years into the coming quarters. They're talking about a 3-year pipeline of new innovative product. So if they can get sort of supply demand right in lifestyle and really get some traction in some of the performance and innovation, I think that can lead us higher.
It's going to be sneakers. It's all about sneakers, and it's not. I mean, they're the largest apparel maker in the world right now. Does the other apparel make any difference? Can they do anything there?
I mean, I think apparel is even more difficult, challenging, than the footwear business. But these guys, I think, the other point that I'd make is sort of 80 to 115 is this is an amazing global brand. I don't think there's a better brand anywhere out there, and competition, as you said, has always been there. So I think if they can get some of the product right, moving in the right direction, you'll start to see, better results, cleaner inventories, margins, and top line. We can see the recovery. But this is definitely
This is not a if you go woke, you go broke story. It's nothing to do with that, does it?
I don't think it is.
Really? It's just coincidence. It was at 123. It's now at 80.
Oh boy. Oh yeah. Hey, I hope you enjoyed that clip here today. Listen, if you're an investor in the market and you do not feel like you're at a high enough level yet, let's say you understand some things in the market, but there's a lot of stuff that maybe you're watching my videos, you're like, I don't really understand. What exactly is that? How does this work? How do I find if a stock's undervalued or overvalued? How do I understand these financial statements on a higher level? All those sorts of things that you need to understand. I want you to click on the first link in the description down there. That is an application to join my private group, which has access to all my best course curriculums to teach you everything you want to know about this game, and all these things you might not fully understand. It's going to teach you that, okay? Plus access to my Discord community of 6- and 7-figure investors and myself in exclusive videos as well. First link in the description down there. Apply, and once you join in there, say hello to me. All right, so what about these latest earnings? Was it really that bad? Should the stock be down at 2018 pricing and down another 20% here today? Well, here's the facts. Let's talk about the facts around this. Revenue for Nike was down 2% on a year-over-year basis, okay? Not something you ever want to see. You never want to see revenue down, right? Cost of sales fell much more substantially as a percent than revenue fell, which is good news. You know, if you are ever in a situation where your revenue goes down, you want to see your cost of sales drop even more. And that's what we saw here with Nike, down 4% with cost of sales. So their gross profit shockingly went up 1% despite revenue being down 2%. That rarely happens with a company. Very rare to see a situation like that. Usually if a company's revenues are going down, their gross profit's almost guaranteed to go down. The fact that Nike had their gross profit go up is very impressive. Their gross margin actually increased year over year to 44.7% from 43.6%, which means likely they're out of a kind of a discounting phase. They were probably discounting a lot of products in the same quarter last year, right? Which sometimes can help your revenue, but it hurts your margins overall, right? Now, also, additionally, if we look at demand creation expense, really wasn't any change there. And we're going to talk about that line item a little later on in this video because it's very important you understand that line item there. Operating overhead expense dropped considerably. It dropped 9%. Now, that number should continue to go down for really the next 1 to 2 years. Nike's doing a lot of cost-cutting measures right now with their business model and really streamlining their employee force, their operations, their facilities right now. And so all that's going to really help the company when it comes to overhead expense over time. So that dropped 9%. So total selling and administrative expenses actually dropped 7% for the company. So as a percent of revenue, it went down to 32.4% from 34.1%, which is more good news for Nike, certainly. And this is not a trend that's just this quarter. It's likely going to continue to play out for the next 1 to 2 years. Now, in terms of interest expense or income, they had a nice income here, 53 mil. And then as far as other income, they had 127 mil here. So income before income tax is 1.7 billion versus 1.2 billion in the same quarter last year. It's 39% growth there. Effective tax rate came in way lower than last year, 17.3 in the same quarter last year. They were at 13.1. So I don't know what magic they pulled there, but impressive tax rate. Good for their tax accountants on there, right? Net income, $1.5 billion for the company in this latest quarter compared to just over $1 billion in the same quarter last year. That's 45% up on a year-over-year basis. And then diluted EPS was up 50% year over year. Came in at 99 cents versus 66 cents, okay? So, looking at that income statement, did the stock deserve to be down another 20% here today? No. I can show you guys some ugly income statements because there's plenty of companies out there that have really bad income statements and some pretty shockingly bad numbers. This is actually rather impressive. The only thing that's not impressive is the revenue. That's why I gave them a B grade, not an A grade. If Nike was growing revenues right now, let's be very clear, this would be an A grade income statement because of how much they're keeping their costs in check and bringing those costs down year over year. The only reason it's a B is because that revenue was down 2% year over year. What about their balance sheet? Check this out. If you look at cash and cash equivalents and short-term investments, it was up to about $11.5 billion roughly year over year. At the same quarter last year, 10.7. Right? And then as far as debt goes, not much of a change there. If you look at long-term debt plus the current portion of long-term debt, they're at about $8.9 billion. Guess what? This same quarter last year, they're at about $8.9 billion. So shareholder equity went up 3% on a year-over-year basis. Why is that so important? This is monumental because here we are with a stock price that has crashed off a cliff in the past year. Yet, you look at stockholder equity, it's actually gone up in the past year, 3%. And so it's a very rare situation if you can get stockholder equity going up while stock price is crashing. This is actually something that's going on with Nike, which actually is a pretty good sign in regards to you want to see your bottom line going up and you want to see your shareholder equity going up. That's like investing 101 as a long-term investor. And that's exactly what we see actually here with Nike right now, right? Now, in terms of their guidance, so what they think might happen for their business model here in the shorter term, right? So, faced with challenge of navigating macro headwinds that have had a pronounced impact on fiscal 2025 and continued softness in China, Nike now expects fiscal year 2025 sales for the sportswear giant to be down mid-single digit, so think kind of in the 4% to probably 7% range, with sales in the first half being down high single digits. So think about kind of in the 8 to 10, or we shouldn't say 10%, 8 or 9% range. That's kind of what I would think about that, right? Maybe even 7%. The company initially guided for a low single-digit decline for sales in 2025. Gross margin in fiscal year 2025 is expected to expand 10 to 30 basis points. So despite them expecting revenues to be down mid-single digits, right? They're still expecting gross margins to actually improve on a year-over-year basis, which is, once again, very rare, and that's actually a really good sign. For Q1, the company is expecting revenue to drop 10%, with gross margin in line with its full year guidance. So once again, that's a really positive thing in terms of gross margin, that they're expecting gross margin to roughly be in line with kind of what they're expecting for the year, despite revenue being down 10%. Woo! Wow, that's pretty shocking there. So the guide, not good, not exciting at all, right? That's pretty clear in regards to that. So the facts and the takeaway from yesterday's earnings is revenue is disappointing. It's not off a cliff. The numbers were down 2%, and then for what they're expecting this year, mid-single digits down, they're talking about, right? That is not a, end of the world, like, oh my gosh, Nike's ruined type number, right? If that was 15%, 20%, which is what I'm seeing some of these companies guiding out for their revenues being down, I'd be really, really concerned. But mid-single digit in this environment like we're about to go through, not concerning. Margins are going up for the company. Profitability is going up substantially for the company. Shareholder equity is up 3% for the company while the stock's down huge. They have a strong balance sheet overall. We just witnessed those numbers, right? And tough times, and Nike's still making bank. I think that might be the most important thing of this whole story, right? This is a disaster dumpster fire for Nike. And their net income was up 45%. Their revenue's down 2%, right? Think about that for a moment. Let that sink in, because think about what it means for other companies when they're actually going through tough times. When other companies are going through tough times, they're losing money on their bottom line. They're in a situation where there's talk about them going bankrupt, right? And here you have Nike, shareholder equity up, profitability through the roof, and this is horrible times for them. And the stock's at multi-year lows. Isn't that incredible? So it kind of reminds me of like this, right? It kind of reminds me, I asked my brother-in-law, I don't really follow soccer too much, which, we call soccer in the United States. You guys might call it football in other parts of the world, right? But I said, hey, is he still like one of the top players? And he's like, well, he's pretty good, but he's not like a top dog like he was, years ago, right? And it kind of reminds me of Nike right now, right? And you could look at LeBron James. LeBron James still one of the best in the world, but is he the LeBron of old? No. Tom Brady, with the Bucks, he was great, but was he quite Tom Brady with the Patriots? Maybe not quite that, right? And that's kind of Nike right now, where it's like, they're still one of the best, but they're just not quite putting up the numbers that they're expected to put up, right? But let's not fool ourselves. Athletes have a shelf life on them, right? And as you get older, it gets tougher and tougher to be at the top. Companies can get their mojo back, and next thing you know, it's like they're in their 20s again. And if you look at Nike over time, guess what? It's happened many times. This company's had plenty of tough times in their history. 1986, stock went down about 17%. 1993, the stock fell 44%. You could have thought it was the end for Nike at that time. What a tough year that was. 1997, the stock fell 35%. 2002, the stock fell over 20%. 2005, the stock fell 4%. 2008, the stock fell over 20%. 2016, the stock fell over 18%. 2022, about a 30% drop. So 2023 was a 7% drop, and 2024 started out horrible. We'll see where the year finishes up, but it started out horrible, right? So understand, this is not the first rodeo for Nike. This is not the first time their stock's gone down a bunch. This is not the first time they've been counted out, right? And at the end of the day, they grow stronger and stronger and stronger over time.